Hey everyone, this is Lucas Rowley from H2R CPA. I hope this video finds you well. Today we wanted to chat about the Employee Retention Credit. Now, this credit originated in the CARES Act, but the recent stimulus bill included some significant changes to the law. As we'll see, a retroactive change was made to allow PPP borrowers to be eligible for the credit in 2020. Other changes were made prospectively, and these will apply for 2021. Let's dig in. So as I mentioned, this credit originated under the CARES Act, and a lot of the rules that are in place for 2020 are dictated by the language in the CARES Act. The Consolidated Appropriations Act, which was signed into law on December 27, 2020, made one large retroactive change to 2020, being that the PPP borrowers are now permitted to take advantage of the credit, but also made significant changes that are being applied prospectively for 2021. And as you'll see on these next few slides, we're going to be dealing with two sets of rules for two different time periods. Let's start with the amount and availability of the credit. And looking at the time period for 2020, which being March to December of 2020, the credit is 50% of the qualified wages paid during a qualifying quarter. Now, qualifying wages are limited to $10,000 per employee for the year, which makes the maximum employee retention credit per employee for 2020 to be $5,000. The enhancement in the stimulus bill that was produced for 2021 is increasing the credit amount to 70% of qualifying wages during a qualifying quarter, but also creating that limit of $10,000 to be applied per quarter rather than on an annual basis. In other words, the maximum employee retention credit per employee for 2021 has now been increased to $14,000. So which employers are eligible for the credit? Well, as I mentioned, the Paycheck Protection Program recipients are now permitted the use of the credit, but they also need to qualify under these conditions. For 2020, there are two conditions that are in place, and the employer needs to meet either of these conditions. The first being the business suspension condition. And the business suspension condition is that if the employer needed to fully or partially suspend business operations for the quarter because of a governmental order, they would qualify for this credit. But only wages paid during the period of suspension would qualify for this credit if the employer is qualifying under the business suspension condition. The next condition is the gross receipts condition. And in the gross receipts condition for 2020, the credit is eligible for the first quarter in which the gross receipts in 2020 are less than half of the same quarter in 2019. So for example, if your gross receipts in the second quarter of 2020 are less than half of your gross receipts in the second quarter of 2019, you are eligible for the credit for the wages paid in that second quarter of 2020. Your eligible quarters will continue until you have a quarter in 2020 that is at least 80% of your comparative quarter of 2019. So if your second quarter of 2020 is less than half, that is your first eligible quarter. Your third quarter is, say, 70% of your 2019 quarter. That is an eligible quarter. If your fourth quarter is 81% of your 2019 comparative quarter, that quarter no longer qualifies. The stimulus bill that was passed at the end of 2020 extended and enhanced this credit. And so for 2021, they changed the rules regarding the gross receipts condition to the benefit of the taxpayer. The business suspension condition, there was no change in those provisions. The gross receipts condition for 2021 has been enhanced under the new stimulus law. And that enhancement is to the benefit of the taxpayer by allowing the first eligible quarter to start when receipts are less than 80% when compared to 2019. So for example, if you're comparing your first quarter 2021 gross receipts and they are less than 80% of your gross receipts for the first quarter of 2019, then that is your first qualifying quarter. Provisions exist in the law to address businesses that were not in existence in 2019. And so if you have questions regarding those specific conditions, or if you were a business that didn't exist in 2019, please reach out to us to see how this applies for you. Now, both laws make a distinction between large employers and small employers. Under the CARES Act, and these are the rules for 2020, large employers are defined as those with 100 or more employees. Wages paid to an employee during a qualifying quarter for large employers only calculate for the credit when they are paid to employees who are not providing services. For small employers, defined as those under 100 employees, wages paid to an employee during a quarter may qualify for the credit regardless of whether the employee is performing services or not for those wages. The stimulus bill provided for an enhancement of this credit to the benefit of the taxpayer by changing the definition of large employers. So for the quarters in 2021 under this credit, employers with less than 500 employees may pay qualifying wages to their employees regardless of whether the employee's earning the wages or not. So let's review some key notes regarding the wages. The qualifying wages include allocable qualified health plan expenses paid on behalf of the employee, as long as those health plan expenses are excluded from the income of the employee. Owner wages are eligible for the credit. However, employees who have a familial relationship with the owners are not eligible. So generally, if you are a family member of an owner who owns directly or indirectly 50% of the entity, that employee's wages are not eligible for the credit. The law includes provisions that prohibit a double benefit on these credits. So for example, if the wages that are being included for employee retention credit are also eligible for the FFCRA, those wages are only eligible for one particular credit. Further, if the wages are forgiven under the PPP loan program, those wages are also ineligible for the employee retention credit to avoid the double benefit. So how do we claim the credit? Well, if you were originally eligible in the CARES Act, you likely would have claimed the credit on your second and third quarter 941s if you were eligible at that time. With the retroactive change to allow PPP borrowers to claim the credit, those taxpayers would have likely filed their second and third quarter 941s already and now need to claim a catch-up credit. The law does provide a catch-up credit to be claimed on the fourth quarter Form 941. However, as of the date of this video, further guidance is expected because the 941 forms have not been amended or corrected to provide for this mechanic. For the credits occurring in 2021, there are 3 ways to take advantage of this credit. Ultimately, the credit will be claimed and reconciled on the quarterly 941 payroll tax returns. So you may wait until you file your first quarter or second quarter 941s to claim the credit for that quarter. If you are anticipating qualifying for this credit, you may request advance payments of the credits by submitting Form 7200 to the IRS. Or the quickest way to realize the benefit of this credit if you're anticipating qualifying is by reducing your federal tax deposits during the qualifying quarter as you're running your payroll processes. We hope that you found that video helpful. Our team at H2R CPA has stayed up to date on this change and many others. If you have questions on how this credit applies to your specific situation, or you're dealing with other business tax and financial issues that you need our help on, please visit our website at h2rcpa.com for more information. Thanks and stay safe.